Let's talk about what's going on in the world today because, I've followed you and I've seen you on lots of shows. I really like your stuff. But I mean, this conversation for me, I think we would be remiss not to unpack what's happening in the world today. We look at what's happening globally, whether it be Russia, Ukraine, US, China, India, what's going on in Germany, the UK. I mean, let's face it, it seems like a total shit show out there. Yet, as investors and as this community looks a lot at real estate investing. Many look at other things. They look at stocks and equities. They look at precious metals. They look at Bitcoin. So we got a lot of ground to cover. So when you see what's happening in the world today, and I've listened to some pretty prominent guys go, the stock market is going to blow up. It's going to go down. It's going to be an epic loss. I don't know where to start with it, but when you look at it, let's talk with the equity market. How are you seeing what's happening and kind of part of your thought process around strategy? Because we still have to exist. We still have to put our money to work. It's losing value at an epic pace. How do we put our money to work even outside of real estate in this conversation, Chris?
Yeah. So, Eamon, it's tough. I mean, we're on a podcast, so people could be listening to this a long time down the road. So I don't really want to throw out predictions or anything like that.
Yeah.
But obviously, there's several stages to the stock market. So I'm a technical analyst, so which means I strictly follow price. I can really care less about financials, politics, everything that comes out, economic data. It's really useless, which kind of goes back to your previous question, which I didn't fully answer. But I'm a technical trader, which means I follow the price charts. And the nice thing about following the price charts is we don't really care which way the market goes. We're not trying to pick a top and guess where a bottom is. We literally let the market pick a direction, and then we use analysis depending on the time frame, and we follow that trend and we jump on board and trade with it. Whether it's going up or down, we can benefit from it. And there's four stages in the stock market. And one of the stages that we could be in right now is like a stage 3, a major topping phase. And the last two times that we had this was the tech bubble in 2000. And that was like an epic 80% crash in, the NASDAQ. It took 16 years to recover. The next time we had that was the 2007, 2008 market top. That was the financial crisis. That was another financial reset. And, a lot of things are showing that is what we're in. These are major topping phases. They can take a year or two to play out. But that is kind of where we are. And a lot of big, other technical traders are looking at the charts, and it is not a very rosy picture in terms of where we could be, a year or so from now. So that's where I really comes forward is I want to come forward and try and show people that, listen, you need to protect yourself, protect your lifestyle, protect your investments in case of a catastrophe. It is way better to miss out on some upside gains than it is to see 20 or 30 years of your life savings just vaporize in 2, 3, 6 months. But the financial industry isn't designed for that, and people have the kind of the wrong mindset when they are investing in the stocks. They're always looking for returns versus always looking to protect themselves. And if you protect yourself, the profits come naturally, and the profits are generally a lot bigger if you can avoid the downside. So that's kind of the angle that I go with the markets, and my outlook is looking like you better be in protective phase in case something bad happens down the road. And again, there's just an overwhelming number of people in retirement or about to retire that now is the time. And this a lot of this bleeds back to growing up. When I was a teenager, I actually got my pilot's license when I was 14. I started getting my pilot's license. I got it when I was 16. I could literally fly a plane before I could legally drive a car. And during that process, I learned all about checklists. If you're anything with a pilot, there's a checklist for walking around your plane before you get in, a checklist, a pre-takeoff, a pre-taxi checklist for everything. And I remember doing my solo, and I remember taking off scared, shaking like a leaf. I took off and I'm flying the circuit around, and I'm literally singing like an elementary, like little kid song. Like it's so nerve-wracking knowing this is it. Follow the checklist and you will be fine. It's just procedure. It's standard, and knowing that really got me into systemizing my trading strategies and being able to follow through and build on it. And, a few years later, my parents ended up going bankrupt. And I had kind of we had a great lifestyle. They had lost everything, and we went right back to the bottom of the food chain. And that was the second major kind of thing that hit me, was like, okay, you can always lose your lifestyle, you can lose your money, some bad things happen. And so those two events, learning to systemize things, follow rules, and then managing your capital, protecting your lifestyle, that is what I grew up kind of with my first two major shockers. One of them was a really positive experience, one of them was a more negative, but they kind of blended together to make me who I am today. And I don't want people to go through bankruptcy or lose 30 or 50% of their life savings right when they need it the most. And that brings us to where we are now. And and I'm trying and protect people by getting them alert to what could be happening, because financial advisors and the financial industry in general are just kind of the buy and hold. Things will be okay. 2022 is a bear market. It's over. It's not what I do with my money. I would not risk my money with somebody just saying, "Oh, it'll be fine." That's not good enough. I've learned the hard way that it's not fine if you don't protect it.
So there's so many things that I want to unpack in what you just shared, and first and foremost is that I think you shine a light on a great thing, which is what I'm hearing. And although you didn't say it directly, is that we got to take the emotionality out of our investing. It's certainly what I coach on the real estate side of things, systemize, have processes, really look at the economic fundamentals that are driving a real estate market. Now you look at the stock market, the equity market, in a similar way, in that you have systems to follow, something that keeps you in check. Like,
Mm-hmm.
it's more than a gut check. This is okay. Technically, this is what it is. Emotions aside, let's be really pragmatic in our approach, because emotions are what get people in trouble. I can't even tell you how many mistakes I've made on the stock market side of things because I got into this emotionality about it and I didn't keep myself in check, which is just my lack of discipline, number one, in that regard, or my lack of awareness, perhaps, or not having a system. And I think that you make a really, really important point for people to not get caught up in the emotions, which is really hard to do given what's happening on social media feeds today. Want to
Mm-hmm.
comment on that, Chris?
Yeah, well, emotions really power the markets. The market is how people feel about a particular stock or commodity or whatever it is. The market is just a wave of the mass psychology sentiment of people thinking that they can make money. They all pile in, or everybody freaked out and thinking they're going to lose money and they sell it. So it drives the markets down. I created these short term indicators, these custom tools that allow us to gauge what people are buying, the ratio of what people are buying. And so I can tell in pre-market in the mornings, I can tell when it's going to be a very stressful day for, subscribers and investors in general. And I do a pre-market video every day. And I'm like, listen, guys, the market is going to gap way up or gap way down. It's a high emotional day. All these things are telling us these things are going to happen. That is how the markets move. Don't panic. And so I'm always really, just the newsletter I do actually just tries to soothe their souls, just let them relax, embrace the volatility. And I tell them what's going to happen in most cases. That's how it unfolds for the day. And, people are always like, oh my gosh, thank goodness, I have you to listen to have my morning coffee to every morning, because it's all about trying to gauge their emotions. And, we have the systems in place, which really are that check and balance. And there are times when I tell everybody, like, we've got to buy here or we've got to exit here. And I'll be like, I know it goes against every bone in our body, but all the technicals are breaking down. Things have changed. And I know you want it to keep going higher and it looks really strong, but it's actually, not. And so we have to, like, I always tell them, just tear the Band-Aid off, hit the sell button, get out of a good trade, get out of a bad trade. Either way, you have to get out of it. And if you have to just, curse and swear when you hit that button. Some people just don't like to get out of a trade, whether it's a loser, because then they've just proven, oh, they took a loss. If it's a winner, they think that why would we get out of a winning trade? But you have to be able to, handle those emotions. And it is tough sometimes to hit that sell button just because our emotions want to do the opposite.
So, but it's interesting what you bring up, is because you're technical, the technicals actually will measure sentiment. Is that what I'm hearing? So that
Mhm.
while everybody else is being emotional, you're not being emotional. You're just looking at the technicals going, oh, sentiment is up or it's down or it's sideways or whatever that might be. So that's one measurement that you're using. It's not the only thing, of course, but I mean, ultimately that's what that does. Is that correct?
Yeah, yeah. So sentiment is a big part of helping time the markets for when major trends are changing. And then of course there's the technical side, which is price driven. And of
Yeah.
course we use a combination of those and other analysis. But sentiment is very, very powerful. But it's a very short term thing. One day it could be one extreme, the next day it could be the other. So it's really just good as a confirming indicator, and really just to kind of
So
time short
just for
term.
clarity though, Chris, when we talk about this, what you're trading, you're not day trading. Uh, well, at least I don't think you are. Buy and hold and forget it. Is also not your pattern. So if you described your style of trading or kind of your strategy around trading, how would you best describe it?
Yeah, so I've done the whole gauntlet. I've done everything from scalping and day trading and options and you name it, futures trading. I've done it all. And I went to school kind of as a business administration. I wanted to become a CEO, and I said I want to work on the factory floor and I want to work my way up. And so I think you need to figure out who you are as a trader and figure out the lifestyle you want, how much you want to stare at a screen, how much you want to trade, how much money you want to make, how much money do you have to work with. And all those things boil down to, okay, what strategies fit that kind of particular profile. And
Mhm.
so my strategy, I'm stuck in a very awkward spot when it comes to my strategy. So I am not an active day trader. I'm not an active swing trader like somebody who trades every week, but I'm not a passive investor who just sits here and lets things kind of go up and down and the roller coaster ride with it. I'm kind of right in a spot between I'm too active for a passive investor with an advisor, and I'm not busy enough for an active trader. And so I'm stuck. And of course, the big money is usually made where nobody is. And
Mhm.
which is the pretty interesting point because it brings us up to this sweet spot. And when somebody falls into my strategy and they're like, oh my gosh, this is absolutely amazing. We do like 5 or 12. We change our portfolio 5 or 12 times. We take one position at a time, so one ETF, which is it's kind of like a mutual fund. Uh, it's almost no work, and we are protecting our capital. We're generating returns as the markets are falling apart or going sideways. And people are like, why isn't everybody doing this? But the problem is the majority of people are like, I don't know enough. My advisor does it. I'm just fine with whatever I get. I'm not happy, but I'm fine. And then you got the active traders who are like, no way, that is such a boring strategy. I'll never make enough money. There's not enough trades. But it doesn't matter how many trades you do. It comes down to what makes the most money. And so I have that sweet spot of 5 to 12 trades a year. We trade the most liquid assets, which are the stock indexes, treasury bonds, the US dollar, and we sit in cash a lot of the time. And the nice thing about it is we can trade millions of dollars, like $1 million portfolios, no problem. And our whole account can keep going up. And that's the nice thing about it. We're not spreading it over a whole bunch of stocks. We're not doing the diversification, which is you buy stocks and bonds, and some are going up, some are going down. You get stuck with really poor average returns. And then when you do go into a major decline, like a stage 4 decline, a financial reset, all the assets go down that you're holding. So diversification doesn't help you. And that's one of the big flaws is with the traditional way, and why technical analysis is so powerful, because if you know what to rotate in and out of, you can dance around the market like it's nothing. And we're just catching nice, big, slow moves. These trades last sometimes 6, 7, 8 months. So it's pretty straightforward strategy in how we do it.